Berkshire Hathaway CEO Warren Buffett is an anomaly as an investor, but in a good way. Since becoming CEO in 1965, he's vastly outpaced the benchmark S&P 500. While there's no shortage of money managers who can string together a couple of years of phenomenal returns, the Oracle of Omaha has been doing it for nearly 6 decades. It's why more than 30,000 people flock to Omaha, Nebraska each year to hear him and his right-hand man Charlie Munger speak at Berkshire's annual shareholder meeting. It's also why so many new and tenured investors mirror the buying and selling activity of Buffett. One thing Berkshire Hathaway's $354 billion investment portfolio makes very clear is that Warren Buffett loves to concentrate his company's invested capital in a small number of top ideas. While it would appear that no company is garnering more attention from Buffett and his investing team at the moment than Apple. Apple is a better business than any we own. As of the closing bell on June 16, 2023, the 915,560,382 shares of Apple stock held by Berkshire Hathaway equates to a market value of $169.3 billion. This works out to 47.8% of the invested assets of Berkshire's investment portfolio and is nearly 40 percentage points higher than the second largest holding by portfolio weighting, Bank of America, 8.5%. The Oracle of Omaha and his team are up big on their Apple stake. Based on estimates, the more than 915 million Apple shares owned by Berkshire Hathaway have a cost basis of $39.62. In other words, Buffett and his investing lieutenants, Ted Weschler and Todd Combs, have turned an approximate $36.3 billion investment into $169.3 billion, not including dividends paid, over 7 years. Not too shabby. There look to be 4 factors that have endeared Buffett to Apple. 1. Competitive advantage. Apple has built a strong brand and a robust ecosystem of products and services. Its customer base and brand. It's pretty consistently viewed as the world's most valuable brand in surveys, and its customers are exceptionally loyal. Its integration of hardware, software, and services, along with its focus on user experience and design, has given it a competitive advantage in the technology industry. 2. Solid management. This second point, which builds on the first, is that Apple has a rock-solid management team led by CEO Tim Cook. Under Cook's leadership, Apple has maintained its dominance in U.S. smartphone market share and continues to evolve into a services provider. Buffett rarely, if ever, invests in businesses with questionable management teams. 3. Innovation. Innovation is the third factor likely driving Buffett's interest in Apple. While the Oracle of Omaha probably couldn't tell you how an iPhone works, he can see via Apple's earnings reports how its evolution into services can lift its operating margin long-term and lessen the revenue volatility that occasionally accompanies iPhone replacement cycles. 4. Cash generation and share repurchases. Apple generates significant amounts of cash through its operations. The company has been actively repurchasing its own shares, which reduces the number of outstanding shares and increases the value of each remaining share. This can be advantageous for long-term investors like Warren Buffett. Apple has one of the best capital return programs. The company has repurchased $586 billion worth of its common stock over the past 10 years. Warren Buffett absolutely loves when Berkshire's stake in a company grows via share buybacks without having to lift a finger. It's worth mentioning that the information I provided is based on historical data. To get the most accurate and up-to-date information on Warren Buffett's current portfolio and investment decisions, it's advisable to refer to the latest reports and announcements from Berkshire Hathaway or consult with a financial advisor. For more videos like this, please subscribe to our YouTube channel.